Welcome to Talk Tickers.
Thanks for tuning in.
Today, we're doing a deep dive into General Motors' first quarter 2025 earnings call.
Yeah, that call happened back on Thursday, May 1st.
And just the standard note, there are forward-looking statements, so the usual disclaimers apply.
Absolutely.
Our goal today is really to summarize the key financials, what management said.
And especially how those recent policy changes, like tariffs, are affecting GM's plans and outlook.
Right. Let's start with the results snapshot then. What were the headline numbers?
Okay, so total company revenue came in at $44 billion.
And how's that compare?
That's up 2% compared to last year, Q1. Wholesales were also up 2% year over year.
Okay. Profitability.
EBIT adjusted was $3.5 billion. That gives a margin of 7.9%.
A bit down from last year?
Yeah, slightly down from Q1 2024. And EPS diluted adjusted hit $2.78.
Got it. What about the U.S. market specifically? I heard some strong numbers there.
Oh, yeah, definitely. U.S. sales growth actually outpaced every other major automaker. Deliveries jumped 17%.
Wow, 17%.
Yep. And their market share climbed to 17.2%.
Okay, and EVs in the U.S.?
They hit 10% U.S. EV market share in Q1, and that actually grew to 12% just in March alone. So they're solidly number 2 in U.S. EV sales now.
Interesting. And North American margins?
8.8%. Right in their target range of 8 to 10%.
Good. Okay. And GM Financial?
Still a strong contributor. EBIT adjusted was almost $700 million.
All right. Quite a bit there. Let's dig deeper. A major theme, you mentioned it, was tariffs and policy shifts.
Definitely. Mary Barra, the CEO, made a point of mentioning the timing of the call.
Right. After the official trade actions.
Exactly. And she thanked President Trump for supporting the U.S. auto industry.
So how is this impacting their guidance?
Well, they updated their full-year EBIT adjusted guidance. It's now $10 to $12.5 billion.
Okay.
And importantly, that range includes a current estimated tariff exposure of $4 to $5 billion.
That's a significant headwind baked in.
It is. But GM stressed they've been preparing for shifts in global trade policy for a while now.
How so?
By really boosting U.S. manufacturing and strengthening their U.S. supply chain. They said direct purchases in the U.S. just for North American production are up 27% since 2019.
That's a big shift. Does that help with compliance too?
It seems so. Their U.S. assembled vehicles are apparently more than 80% USMCA compliant now.
Okay.
And get this, direct material spend in China for stuff going into U.S. production, less than 3%.
Wow. Okay. So they've really localized.
Seems like a deliberate strategy. And directly because of the tariff policy, they've increased full-size pickup production at Fort Wayne.
By how much?
By about 50,000 units a year. And they said plans are underway to further increase U.S. vehicle production overall.
And are they working with suppliers on this too?
Yeah, absolutely. They're pushing suppliers to increase U.S. content and USMCA compliance.
Makes sense.
That includes boosting production of U.S. assembled battery modules, which is key for EVs.
So the recent government actions, how do they fit into offsetting this?
Well, the idea is that the presidential actions will provide a tariff offset based on the sheer number of vehicles GM builds in the U.S. annually, over 1.5 million.
Ah, okay. So it helps cushion the blow on parts tariffs.
Exactly. And their updated 2025 guidance actually assumes they can offset at least 30% of that $4 to $5 billion tariff headwind themselves.
Through these self-help initiatives, right?
Precisely. Increasing production, working with suppliers, leveraging their U.S. footprint.
Okay, let's pivot a bit. Talk about operational highlights.
Yeah.
Those U.S. market share gains you mentioned earlier are pretty striking.
Yeah, nearly 2 full points year over year in Q1. That really stands out.
What's driving it?
Well, Chevrolet is apparently the fastest growing EV brand right now. That's significant.
Definitely.
And Cadillac gained market share too, both in ICE vehicles and EVs.
And their redesigned SUVs seem to be doing well.
Very well. And more profitably too. They mentioned better capital efficiency, less complexity, manufacturing improvements, what you see in the numbers. Sales of the redesigned Chevy Suburban and GMC Yukon up over 30%.
Wow.
And the Cadillac Escalade had its best Q1 ever.
So it's strong product reception there. Was there anything about supply chain issues? I thought I heard something.
Yeah, there was a fire at a supplier factory. Could have been a bigger issue.
Right.
But the supply chain team managed to limit the impact on full-size pickup and SUV production.
How big was the hit?
About 7,000 units, they estimate. And they expect to make that up in Q2.
Okay, good recovery then. Let's look internationally. China, always a key market.
Yeah, and despite restructuring efforts there, they actually posted positive equity income.
That's interesting.
They're launching new NEVs New energy vehicles under the Buick Electra sub-brand seems to be helping.
And technology, software, autonomous driving.
Big focus there. They talked about the next-gen software-defined vehicle platform and enhancing Super Cruise. Motor Trend actually named it the best driver assistance tech.
Oh, really?
Yeah, and now it includes towing capability.
That's useful. Okay, what about their EV strategy overall? It feels like maybe there's a shift.
I think strategic is the word they use. They're sort of moderating production now.
To match demand.
Exactly. Aligning more closely with consumer demand while focusing investment on efficiency and cost reduction for EVs.
Makes sense in the current climate.
And they made a deal to sell their share of the LTM sales plan, and Lansing to LG Energy Solution helps recoup some capital.
And longer-term EV supply chain. Batteries.
Making progress there, too. Developing U.S. sources for battery inputs, lithium, rare earths.
Right. The geopolitical focus on minerals.
Precisely. That Lithium Americas joint venture in Nevada, Phase 1, expected to open in 2027.
That's a big step towards localization.
Could be. And they also mentioned deploying AI across the business, working with NVIDIA.
Okay, lots going on operationally. Let's dive back into the financials a bit deeper. Pricing power.
Yeah, that was a noticeable positive, added about $900 million year over year.
It's a good demand and discipline strategy.
Seems like it. Now, wholesale volumes for the big light-duty trucks were down slightly.
Because of the plant downtime and that supplier fire.
Exactly. But that was offset by growth in smaller SUVs, like the Chevy Trax and Buick Envista.
Okay. And over 90% year-over-year growth in EV wholesales. Huge jump there.
Wow. Any headwinds financially?
FX was one. The weaker Mexican peso cost them about $300 million.
Got it. And costs, fixed costs.
They were up about $400 million.
What drove that?
Mostly higher depreciation and amortization, some warranty pressure.
Including that voluntary thing for the 6.2L engine.
Yeah, the L87 engine, that's part of it. And higher labor costs, too.
Offsets.
Some cost reductions at Cruise helped partially offset those increases.
And the warranty outlook.
Well, they expect another $500 million hit in Q2 specifically for that L87 engine warranty program.
Ouch.
But interestingly, for the full year 2025, they still expect warranty overall to be a slight tailwind.
Okay, that's surprising. How did the different segments perform profit-wise?
North America margins stayed strong, like we said, 8.8%.
Yeah, even with cruise costs included now.
Right. GM International outside of China was basically break even, which is typical for a seasonally low Q1.
And China itself, equity income was nearly $50 million. They showed sequential market share growth, and NEV sales were up 53% year over year.
So some positive momentum there despite restructuring.
Seems so. And GM Financial, as mentioned, strong performance. Higher financing revenue and lease income offset higher loan provisions.
And they paid a dividend back to GM.
Yep, $350 million.
Okay. Let's talk capital allocation. Any changes there?
Policy is the same. Invest in the business, keep a strong balance sheet, return capital to shareholders.
Actions this quarter.
They paid off $500 million in senior notes, another $1.25 billion in shares later this year, and they got that $1.8 billion term loan agreement with Ultium Cells to help prepay the DOE loan early.
Right, share buybacks.
They finished a $2 billion accelerated share repurchase in Q1, retired about 33 million shares.
Okay.
They still have $4.3 billion authorized for repurchases, but they're pausing additional buybacks for now.
Why the pause?
Citing the uncertainty in the operating environment, tariffs, policy shifts,
Makes sense to be cautious. Do they expect to restart?
The indication was that the plan is still to execute the full authorization eventually. And they noted strong demand in March and April, SAR approaching 18 million.
Higher than their plan.
Yeah, but they're sticking to their initial full-year outlook based on around 16 million units for now.
Got it. So looking ahead, let's recap the formal guidance for 2025.
Okay, full-year EBIT adjusted. $10 to $12.5 billion.
EPS.
Diluted adjusted EPS, $8.25 to $10 per share.
And cash flow.
Adjusted automotive free cash flow, $7.5 to $10 billion.
Any changes to assumptions, like pricing?
Yes. North American pricing is now expected to be up 0.5% to 1% year over year. That's a change from previously expecting it to be down.
Interesting. And EVs?
Continue to manage production in line with demand.
Cruise cost savings.
Targeting at least $500 million in year-over-year savings there for 2025.
Commodities.
Expected to be relatively flat year over year.
China outlook.
Expecting a tailwind from the restructuring targeting profitable equity income.
Okay. International outside China.
Similar to 2024 is the expectation.
GM Financial.
EBT adjusted guidance is $2.5 to $3 billion.
And finally, CapEx.
$10 to $11 billion for the year. And that includes investments in the battery joint ventures.
Okay, that's a lot of detail. So if you're an investor listening, try to synthesize all this. What's the big picture takeaway?
I think it shows a company really actively managing through a pretty complex period, serious policy shifts, especially tariffs.
Right.
But they seem very focused on adapting, leaning into their ICE strengths while still growing EVs strategically.
And that updated guidance gives a clearer picture of the tariff hit, but also their confidence in offsetting some of it.
Exactly. Those proactive moves in U.S. manufacturing and supply chain look pretty crucial right now.
Yeah.
Plus the focus on cost discipline, smart EV investments, using AI, those seem like key themes for how they plan to stay profitable and efficient.
And the pause on buybacks just signals that caution, given all the uncertainty.
Right. A bit of wait and see on the capital return front.
Okay, time for our speculative segment. This is not financial advice. Based on this call, what's an outrageous but plausible trade idea?
All right, let's think. Given GM's big push on U.S. manufacturing and sourcing, and how tariffs might hurt competitors more reliant on imports, maybe, and this is definitely speculative, consider a long position in GM paired with a short position in, say, a basket of European luxury automakers.
The ones heavily reliant on U.S. imports.
Exactly. The thinking is GM could maybe grab more market share, maybe improve margins relative to those guys if tariffs really bite them.
Interesting angle. Playing the localization and tariff differential. Got another one?
Okay, maybe leaning into the battery supply chain aspect. GM's committed to developing U.S. sources, right? That Lithium Americas venture.
Yeah, in Nevada.
And with the whole geopolitical focus on critical minerals, maybe a speculative long position in select U.S.-based lithium miners.
Ones with strong ties to automakers like GM.
Potentially. While maybe hedging with a short on a broader auto industry ETF.
So betting on the value of that vertical integration and supply chain security.
Kind of. It's a play on specific U.S. resource development becoming more valuable in this environment. Again, highly speculative.
Definitely fits the outrageous but plausible bill. Okay, let's wrap up this deep dive on GM's Q1 call.
Yeah, it's clear they're navigating a really dynamic situation, adapting to policy, leveraging their products, driving efficiency.
The strategy seems focused on mitigating those tariff impacts while still investing in EVs and tech.
For sure. Challenges are definitely still there, but their underlying business seems solid and their approach feels proactive.
Definitely gives investors a lot to think about.
Absolutely. We encourage everyone listening to dig into the details further. What are your thoughts on GM's strategy? How do you see these tariffs playing out across the industry?
Yeah, join the conversation, share your insights. Thanks for tuning in to Talk Tickers.